Hi, today is Monday, the 5th of October, and this is a weekly recap and look ahead on this new week. Last week was a little bit active, hectic, agitated, but overall, as you can see from the October trade, it ended up the week on a good note, about the mid 3300s, and we can expect after the little tweet that the market will try and grind up again. There will probably be a strong reaction to news from the quote-unquote real economy, bankruptcies, bank failures. Yes, there's a lot going on under the scene. It's visible in the backwardation, and also, as I showed in the SPX Outlook video, the SPX to VIX decorrelation is of concern. So cautiously, at least the October trade is in a fairly good position. We should end up this trade to expiration around $1,000, which isn't bad considering the difficult market we're in. I don't think I will do more to this trade. If anything, I should actually start reducing, and maybe of course reducing the profit potential here. Gamma at 0.12 is fine, and Gamma could improve as the T plus 0 slowly gets closer to the expiration line, so the trade should be doing okay. At the moment we are at almost $400. Of course, this is the Friday's close, so we will see how it goes when markets reopen, but probably nothing much to do. Again, to be on the safe side, I would rather reduce by taking off call credit spreads and put credit spreads, basically buying a short condor here. So nothing much to do here, unless of course the market just falls rapidly, and then I wouldn't want to lose this profit. I wouldn't want to go into a drawdown this late into the trade. So if we look at the 1SD, 2SD today, that's okay, but of course considering volatility level, maybe by Monday, as you can see, 2SD can imply some risk. 1SD would be fine. So we will see how it goes. So of course we can't get a trade to expiration without paying a lot more attention to it, but it should be doing okay. Now let's look at the trade. This trade is doing okay. I would say that for some reason this trade has not improved last week, and that's probably due to the weird volatility behavior, but overall, as you can see, we have a pretty good tent and a profit potential of a very large range, so nothing to be too worried about. Now that it's got into what I call a cruising altitude, we should be a little bit more picky in terms of additional layers. It can happen to reduce delta, possibly raise the upper expression line, but we are already close to $2,000. So this trade should be left alone as long as possible. Not many adjustments this week. Probably more interesting is that on Friday I entered a December cycle with a pretty far OTM structure just to get a flat delta. Considering volatility level, it's like in November a wider structure, 125, 100 wings. So as we've seen in recent cycles, this is safer. Of course, we start with a very little setup, but this trade is fine. I was hesitating about adding a safe, like less than 20, probably 15 delta CCS, and that can still be done. The one I had in mind was this one for 210. If the market goes up and we still have that weird market up, VIX up behavior, then the CCS may be priced better. So I'm not in a rush, but of course I will try and raise the upper expression line as soon as possible. As you can see, that would be very safe over a large range. So this is maybe something I would think of. Small flattish to slightly negative. The Vega is not too much of a problem early in the trade. At the moment, the Vega is nothing. So as you can see, now the market could fall. Even without this CCS, this structure is very resilient as it often early in the trade. Just some, we could call this an additional layer since it's not exactly a scaling. And I can understand many people who have been using the Rhino may feel a little bit confused, but really the main philosophy of the Rhino is a flattish delta over the largest possible. So that still conforms the main principle and the main objective of this trade. So this is probably what I would have in mind. Now let's have a look at other trades I've been playing with. I've entered an SPX Baby Rhino for the October expiration. This trade is not doing too badly. Basically it's a 100/75, which is also wider than I would usually be doing, and because volatility is high and delta is flattened naturally, there's only one calendar on the upside. So this trade should be closed this week. On 10k planned capital, this trade is already at 2.3%, and I will probably close it maybe in the next few days. I'm still just testing the water to get back into this trade. Normally, the profit target is about 500. I have other hedge trades which have been doing very, very well lately. Let me show you triple put calendar that I mentioned on the Rhino Slack and as part of the hedge channel. This one started, I had another one a month before, and this trade was basically taking advantage of the positive horizontal skew from backwardation with an increased volatility in October due to elections. So selling the October vol and buying the December vol. And I could have actually gone for a wider horizontal spread, but I thought that would be good enough. And this trade was doing pretty well, and the only thing I've done to this trade is now to protect capital, because I don't want to roll it further, but I rolled it from the shorts from October to November, taking profits on the shorts, which had lost a lot of value, also at the same time flattening delta, and I've also turned the triple calendar into double calendar. So the upper calendar has been dropped, and this trade is doing well now with a very flat delta. I may keep it a bit longer, but this is already a very good profit for this trade. Right, I've got a few experiments which I've shared on the hedge channel of the Rhino Slack, so please have a look and come back to me if you have any questions. Thank you for watching, and bye for now.